Hey Bowtie Nation, Joseph Hogue with a new type of video highlighting the most important stock market news I'm following and the stocks to watch. I spend hours every day following the news, and this right here, this is where I get most of my investing ideas, thinking through a piece of market news to the stocks that are going to benefit. Now, I need your input here as well. So after you watch the video, go to the post tab here on the channel and vote if you want to see more of these types of videos. I'll put a poll here about these types of videos. Please vote yes or no on this type of video. And let me know in the comments there, what do you want to see? What types of stocks you want to see? What types of videos you want to see? While you're there, check out the new playlist on the channel, the Stock Market 2026 Best Of. Each video, I'll be highlighting the favorite stocks of this year, which stocks to buy in which themes, so make sure you check that out. This first article caught my attention. The new federal dietary recommendations are out with some major changes. Now, this is important because this influences federal policies like government policies like school and low income assistance payouts. Here we have big warnings on processed foods and additives. Here you see the processed foods have been a major target of the current administration. We also see new recommendation to eat a lot more protein, a lot more meat. Here we have the current recommendation called for healthy adults to consume zero point 0.8 grams per kilogram of body weight. Now they're jumping that, they're almost doubling that 1.2 to 1.6 grams of protein per kilogram. That is going to mean a lot more meat in people's diets. The new guidelines also warn against sugar. Another big target of the administration is against sugar. Previous federal guidelines here were recommending limiting sugar calories up to 10% of daily calories for a 2,000 calorie diet. That was up to 50 grams of sugar that you could eat safely, according to the previous guidelines. Now it's no more than 10 grams. So basically cutting that into a fifth of what it was. And they give an example here. One serving of Honey Nut Cheerios is 12 grams. So basically, this completely rules out having a bowl of Honey Nut Cheerios in the morning, because that would be your entire daily grams of sugar recommended by these new guidelines. We can see a little bit about what this looks like here. They have inverted the food pyramid. This was the big news, how much this food pyramid has changed. It used to be fat on the bottom, and then the top was a little bit at the top with your fats and that kind of thing. Now they have inverted this to show, I guess, to highlight the protein, the vegetables, that kind of thing. They do have some fats in there, some good fats, avocado, some oils there. So much more of a focus here on proteins, on meats, on dairy, away from the processed food and away from those whole grains. Some of the big winners here are going to be those meat producers, those packaged meat producers. Tyson Foods here, TSN, that's going to be a big winner. Hormel Foods also, with some of the cured meats and some of their packaged meats, it's going to be a big winner as well. Hormel, I believe, is HRL. That is Hormel Foods Corporation. You might look at that one as well. That one is down 25% over the last year. So one that might actually be in good value territory right now. Some of the losers here in this new federal regulations. The consumer staples group is not going to get any reprieve here. We got Kraft Heinz, ticker KHC, obviously a big producer of those processed foods. All of their sauces, all of their foods, very heavily processed there. Kraft mac and cheese, probably one of the most heavily processed foods known to man. So that's down 21% over the last year. As a lot of these consumer staples companies, they found that inflation increasing their own costs for supplies and for inputs, but they couldn't pass all those costs on to consumers. So seeing their profitability hit there, down 21%. We also have PepsiCo, ticker PEP, and Coca-Cola, ticker KO, probably not going to be helped by these new guidelines. First, against the warnings against sugar and lower sugar consumption, also processed foods in their snacks. Both Pepsi and Coca-Cola have went heavily into snacks over the last decade, really diversifying their own portfolio from beverages into snacks as well, but both very highly processed and very high in sugar. So not going to be helping either of these stocks. Of course, half the news this week has been about Venezuela, the U.S. moving in to oust Maduro and keep a lot of the regime in power there, and how that's going to work over the next few years. Honestly, folks, I got to tell you, I think this is going to be more of a nothing burger for investors when it comes out to it. Okay, you have to understand, even though Venezuela claims to have the world's largest reserves, 300 billion barrels of oil in reserves, That's bullshit. Okay. Last count, last official count was like 20 years ago. And it was 100 billion barrels of reserves, still very large, still obviously the largest reserves here in the Western Hemisphere, even higher than Canada's reserves there for oil. So it is an oil powerhouse. But 20 years of mismanagement under first Chavez and then Maduro, they are only about 1% of the world's oil supply right now. They have just not invested in their oil fields. They are horribly outdated. You can see how this has impacted U.S. crude imports from Venezuela as far back as 2000. We were importing up to or more than 1 million barrels a day from Venezuela. That was a big chunk of total U.S. crude oil imports. So we were importing about 4 million barrels a day from Canada, Mexico, and Venezuela. Venezuela accounted for about 25% of that, so about 25% of the U.S. oil imports there. It has dropped to almost nothing now, basically nothing there after the pandemic. It's come back up a little bit just because Chevron is the only oil company still operating there in the country. But you can see the gap has been filled by Canada and Mexico largely. There's estimates that just to keep the production at where it is for Venezuela right now. Okay, so keeping this very low production from the fields would cost an estimated between $2 to $3 billion over the next few years just to keep that production consistent. That's nothing about reinvesting in those fields and bringing that oil production up. That's 44 million barrels at the current price of oil. Okay, so we would have to take basically 44 million barrels of oil, the price or the cash flow from those barrels, just to keep production consistent here. So now a lot of the reasoning why I think this is not going to be really a big news item for crude oil is because where crude oil is right now. Okay, we can see that oil prices have been falling since 2022, now below some of the company's cost of production. Okay, back there in 2022 when Russia invaded Ukraine and we had that big oil scare there, it was up about $125 per barrel on West Texas Intermediate. Okay, so that's the major US crude oil type there, that WTI. It is now at $57 a barrel. A lot of oil companies there not profitable under $60 a barrel, especially the ones in the Permian shale area where it's a little bit more expensive to get oil out of the ground. So what I'm thinking here is it is going to be so expensive to invest in those Venezuelan oil fields just to get that production up. It is still going to be so uncertain. If you don't know this, Trump has kept in the vice president Gonzalez there in Venezuela has kept most of Maduro's regime, most of Maduro's apparatus there in charge. So basically we have a very US unfriendly government there in Venezuela. Of course, they're going to be trying to play ball with the Trump administration just so he doesn't change at the top ranks there. But they are unfriendly to the US, to US oil companies. So a lot of oil companies, they're looking at this and saying, okay, why am I going to spend the hundreds of billions of dollars necessary to upgrade Venezuelan oil fields to get that production back up if they're just going to nationalize it later on down the road? So I would say despite some of the upside we saw in some of those oil companies, Chevron was a big winner over the last few days just because it is the only major US oil company that has continued to work in Venezuela. We also saw some upside from some of the other explorers though, Exxon, some of the other oil explorers there as well. I would say avoid those names because they're really not going to get anything out of this. If anybody wins, it would be the oil equipment and services companies, okay? Those companies that will be paid to upgrade some of those Venezuelan oil fields. They're going to have to get those contracts from those larger drillers. So here we're looking at companies like Halliburton, ticker HAL, Schlumberger, ticker SLB, and Baker Hughes, ticker BKR. These are the major companies providing those drilling services to the major oil companies like Chevron, like Exxon. So basically, they'll be contracted to provide the equipment, provide the services to go down there and upgrade some of these oil fields. What I would say, though, I would wait for some of these to come back down. We saw a huge move just over the past 5 days. A lot of these companies up 12, 10%, 7% on this news that they could be contracted to go in and provide some of those services. But again, we're looking at a very, very weak oil market with record US production, record production of oil from the OPEC countries. So really a lot of the oil companies are looking at this and saying, Why? We've already got too much oil. We've already got prices at 3-year lows of oil. We can't even produce oil in the United States at a profit at this price. So why are we going to spend money on Venezuela at this point? So I would wait for some of these oil services companies stocks to come down a little bit, then get into them, and then start building your position into them ahead of what could be, yeah, a few 3-4 years of good profits in these equipment services companies. We've still got more stock market news and the stocks to buy to highlight, but I also want to personally invite you to get the weekly bow tie, our free weekly newsletter with all the stock market news, strategies, and trends you need to know. Each week before the market opens, I'll show you what I'm watching, the stocks that could highlight the week. It's all totally free, just something I like to do for all you out there in the community. So look for the special invite link I'll leave in the description. We also see President Trump is going to try to ban large institutional investors from buying homes. Folks, you got to understand going into midterm elections, there is going to be a lot of issues. One of the biggest, housing affordability, going to be a big issue for the midterm elections. So here we see Trump threatening to ban institutional buyers from these homes on private equity and REITs that have been huge buyers of real estate over the last few years, been very good cash flow for them. So we've got private equity like Blackstone here. We've got Invitation Homes, which is the largest renter of single family homes in the country there. It says Blackstone was the largest private equity owner of apartments in the US, more than 230,000 units. So basically what the government is saying, what Trump is saying is you've got all these institutional buyers, these billion-dollar hedge funds, private equity, real estate investment trusts companies coming in, buying up all the available supply of homes and driving up those prices, right? Making it so those prices stay high, supporting housing prices, so that it's really an affordability issue for regular investors or regular buyers, people just wanting to buy a single family home to live in. Here you can see what that news did to some of these stocks. Again, Invitation Homes, one of the largest institutional investors in those single family homes, really. Blackstone is a little bit more towards apartments, but Invitation Homes here, this INVH, the red line here, down as much as 7.5% when that news came out. You've also got American Homes for Rent, again, a big buyer in the single family home space and then renting those homes out. So about 7.5% down on that one. Blackstone, again, Blackstone, large institutional buyer, private equity buyer, but mostly in the apartment space. Still, that one was down about 2.5, about 2% on that news. But as with a lot of those presidential tweets, it would be difficult, if not impossible, and legally questionable to really be able to ban these buyers. So as often as the case is with this Trump news, you got to kind of wait for that knee-jerk reaction and then sometimes even trade against it. You go back into those, maybe American Homes for Rent, maybe Invitation Homes is a good buy at this after that drop. We can see that it has come up over the last day after this news. A lot of these are going to be supported by still high U.S. real estate prices, as well as that constant inflation that is keeping that asset prices higher. More likely, and I think the bigger story going to be this year in 2026, a big boost to the market, and something I'm going to highlight in this week's Monday market update, 9 a.m. Eastern, before the market opens. I'll highlight this in more detail, but there's going to be big political pressure on the Fed to start buying mortgage bonds again. And something's called quantitative easing. They've done this in the past, maybe a similar federal policy. Basically, they go into the market and buy mortgage bonds. Okay, so a huge buyer, trillions of dollars in mortgage bonds. That brings the interest rate down on mortgages or on those longer term interest rates, or helps to bring the interest rates down. That is going to be a big boost to home buying, to housing affordability. I believe the president is really going to pressure the Fed, or whoever he puts in there as chair after Powell leaves, as well as the rest of the voting members. If they don't do this kind of quantitative easing where they're buying mortgage bonds, pulling down the mortgage rates, pulling down those long-term interest rates. He's going to launch some other federal policy programs to do this ahead of the midterm elections, just to be able to unlock some of that value there in home equity. Okay, we have trillions of dollars, 20, 30 trillion dollars locked up in home equity that just isn't being tapped because interest rates are so high. Nobody wants to take a home equity loan out on their house to tap some of that equity buried in their house if they're going to have to pay a 6 or 7 or 8% interest rate on that loan. So I believe this is going to be a big story for 2026, especially as we get closer to the election. Going to be more mortgage buying by the Fed, going to dump a lot of money into the economy and really going to support the stock market. And more Trump news for the market this week. President Trump saying he wants to increase the defense budget to $1.5 trillion. Okay, that would be a huge increase. Defense right now, just over $1 trillion right now. So that would be an almost 50% increase in the budget for the military. Of course, this comes a day after saying he wanted to ban buybacks, stock buybacks, and dividends by defense companies. You can see what that did to some of those stocks. Some of the stocks we watch and hear in defense, RTX Corporation, ticker RTX, the old Raytheon there, NOC, Northrop Grumman, and LMT, Lockheed Martin, the big three defense companies there. You can see that drove those stocks down as much as 5% or more on that news that Trump was getting involved and wouldn't allow them to pay dividends anymore. Now on this news, those stocks up as much as 10% on that news today. So it kind of makes you wonder if some of this news isn't just to get those stocks to fall and then come back up. I don't want to be a conspiracy theorist here, but come on, anytime you have a stock move of 5% down and then 10% up, basically 15% move in 2 days just on a couple of tweets, that's a little suspicious here. Now, regardless, defense is clearly a winner in the Trump administration. I doubt he gets that $1.5 trillion defense budget, especially with some of the fiscal hawks on the Republican side there in Congress. But it is the only budget increase every year you can count on. Within those largest U.S. defense companies, I would be focusing on RTX Corporation, ticker RTX, Lockheed Martin, LMT, NOC, Northrop Grumman are good contenders there as well. But RTX, so Raytheon, has that best anti-surface-to-air missile portfolio. Okay, the ability to shoot those missiles out of the sky, as well as that drone technology. That's really where they're focusing on, and that's really the direction warfare is going at here. So I would be buying shares of RTX Corporation, maybe when they come down a little bit after this big spike over the last day on this news, but definitely looking at RTX Corporation, ticker RTX. Get all the stock market news you need to see before the market opens and free with the weekly bow tie and the special invite link I'll leave in the description below. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.